Dear viewers, welcome to this episode of Your Life, Your Money. Today I have picked up a hot topic, the crucial question that is there in your mind. What should we do today when the markets are making lifetime highs? Should I buy? Should I sell? Any decision that you take should be a rational decision based on facts and figures, based on what history has taught us, based on a judgment of the future. Watch this episode till the end. Very, very important points that I'm bringing for you, and this will guide you. Should you be buying or should you be selling in this market? This is NRI Money Clinic for you, and I'm Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
You see the Indian markets making lifetime highs. As I record this episode, we are above 74,000 on the Sensex, and I have not seen these valuations during my lifetime. So we are in a new territory. What should you do? Should you be buying or should you be selling? Before I put across my arguments about what you should be doing, I would like to hear from you. What do you think? Are you stuck with fear or are you hopeful of the market? What do you intend to do? Would you be selling? Would you be buying in this particular market? Before you watch this episode, please drop your opinion in the comment section below. I will be listening to you and I will definitely reply all those people who comment immediately. I am in the stock markets for a long period of time. I have entered the stock markets in my late 20s. That's in the year 1990s onwards. I have been an active participant of the market. I have seen several bull markets, I have seen several bear markets, I have seen markets making frothy valuations, I have seen markets deeply crashing. I have seen a good amount of historical perspectives of the market, what it will do at what points of time. That's my personal experience and that gives me a certain amount of judgment. But I was also curious to know what others think, and I started researching on this topic. What happens when the markets make lifetime highs? I came across very interesting perspectives from the real thinkers of the industry. One data which came out was from Mr. Atul Suri of Megatrends. He had produced a YouTube video, Markets at Lifetime High, and he dug into a lot of research around from the year 2000 till 2024. Very, very interesting perspective. We remain in gratitude to you, Mr. Atul Suri, for this piece of master research, and I know it will guide people the real way. As per the research done by Marathon Trends, an interesting observation is between the year 2000 to 2024, markets have made lifetime highs, believe it or not, more than 450 times. 2024 and the year behind that we take is 2000, roughly about 24 years time, markets have made lifetime highs 450 times. So market making lifetime highs is not something which is unusual. It is very common. When the markets climb up, they have to conquer the lifetime highs. So people get fearful of when a market gets lifetime high. Why should you be? As I said, I am in the market from my late 20s. When I entered the market, the Sensex was just about 1,500 and today it is at 74,000. I have tracked the entire Sensex as a participant of the market right from about 1,500 level till the level of 74,000. So markets will make periodical lifetime highs very, very often. It is not something which is unusual. That's the way it moves up. You take the life of a child. A child could be the prime minister in the making. It could be the scientist in the making. It could be an engineer, doctor, lawyer, some professional in the making. But the child also has to trace that journey of education the same way. When it completes the first standard, it is at its lifetime high. When it completes the fifth standard, again it is at a lifetime high. Every year you cross, if you have to graduate towards the next level, it's obvious that you have to cross that hurdle of lifetime highs. It's a natural progression. So the stock markets are not something which is alone here. So lifetime highs is absolutely normal journey. So nobody will go from a level and climb to a lifetime high and then you retrace and you will never cross that. That's not the way to look at it. Lifetime highs is a natural progression, and if you do not understand this, then you do the mistake of taking wrong decisions in these kinds of markets. I also got another piece of research done by my friend Prasad Nandurbarkar at White Oak Capital. I'm sharing that slide here. And he says, out of the last 33 years, Sensex has made lifetime highs on 22 years. It spent time in 33 years. Out of 33 years, in 22 years, lifetime highs were reached. You watch the slide yourself to know the thing. So if it's hitting a lifetime high, it is not something to be worried. It is to be taken in stride, and you should think that it's a natural phenomena to markets to conquer lifetime highs. How does the market really move up? If a market is moving up, it moves in an ascending channel. The upper line of the ascending channel is a lifetime high. Then it retraces a bit, touches the lower point, and again makes a lifetime high, and again retraces and comes back. It moves in an ascending channel, and the top end, which is called the higher highs and the higher bottoms. Every time it retraces, it will not go back far behind, but it will be a higher top. Higher top and higher bottoms are visible when the markets is going through a bull run. So don't become anxious that, okay, yesterday there was a lifetime high, today markets came down by 1%, 2%, 3%. That's not something to be worried. That's a perfect wave-like pattern you see in the markets place. Now let us look at a little bit more of data and see from a present context where we are in India. The lifetime highs you are seeing in India, is it specific to India alone, or is it a part of global rally? If you examine the stock markets of the world in different countries, you have no hesitation to say that this is not India-centric rally. This is a rally which is happening across the globe. No doubt, Indian markets are the first one to conquer the lifetime highs and start moving up the journey towards the higher highs day after day or month after month. Post the correction, what we observed between 21 to 23, Indian markets came out first. Then came the European markets, and then came the US market. So you take any market today, be it the US, be it the Euro stocks or the Indian market, even the Japanese markets are seeing lifetime highs. In case of Japanese market, I will not say that it's a lifetime high, because somewhere in the year 1987-88, it had been much higher than what it is today. The valuation what you see on the Japanese market today is about 6% below the lifetime highs of the Japanese market, what it was seen way back in 1987. So the Japanese markets had spent about 30 odd years lying low and doing nothing, and today those markets have also come up, and it's just about 6% below the lifetime highs. But other markets, primarily the Eurozone markets as well as the US markets, they are all at lifetime highs. So India, what you are seeing today, is not an isolated case. It's a part of global rally. Even though the growth of India is a part of the global rally, why there is outperformance of Indian stock market? Why it is moving that fast? Why it is outpacing other markets? Why did it start moving up from the lifetime highs much ahead of other markets? The answer lies in what's happening in India today. The opinion polls which have come and have been coming in the last couple of weeks is clearly telling the present government, which is pro-business, pro-reform, is likely to be re-elected with a thumping majority. That is giving confidence for the markets. You can also look at what exactly is happening on the ground. If you look at the GST number, that will tell you a story. The GST returns are rising month after month, and they are climbing the peak, which means it is an indication of expansion of economic activity. Likewise, you can look at the statistics which is being published regularly, and recent announcement that Indian growth has accelerated further is giving fillip to the market, and they are moving at a much faster rate than the other global markets. Now, one thing which stands out here is the cash flows. The markets are seeing a lot of inflows into the market, be it the individual retail investors, be it the domestic institutional investors, international investors. Everybody is pouring money into the market. One classic change which has happened in the Indian markets is in the years, many years before, markets used to fall when the FIs used to pull out the money, and markets used to rally when the money used to come from outside of India. Here there is a slight slight change. The change is that now the Indian retail investors are pouring in money at regular intervals of time, be it through LIC, be it through the insurance companies, be it through the mutual fund companies, be it through the SIP route. They are pouring a humongous amount of money into the stock market. This is preventing markets from falling down when the FIIs pull out from the market. You'll be surprised to see at the moment the SIP flows, the systematic investment flows which are coming into the market, is in excess of 16,000 crore every month. That's humongous. That's $2 billion equivalent of money, domestic money, which is flowing into the market. Add to this the flows which are coming from PMS, flows coming from the EPF, the flows coming from the insurance companies. This is all creating the liquidity or the fuel which is required for the markets to move up. So the growth is in favor, sentiments are in favor, liquidity is in favor. We do not see anything which is likely to go wrong at this point of time. No one can say what happens in the future. Future is always uncertain. There can be a black swan event. That's a perfect possibility. That's the way the stock markets behave. But what is required for the rally to continue? The supportive growth, the sentiments and the liquidity is very much visible in the stock market. So this is pushing the stocks into a higher level at month after month. Why there is a global rally? We can understand that there are things which are happening correctly in India and there is support for the stock markets to climb up. But why global rally? Here there is a slightly difficult assessment to make. There are things which are clear to us, there are things which are not so clear to us. The information or the data coming from the US suggests the growth is quite well over there. But it is also showing slight signs of increase in unemployment, which means to say it could be good today, probably slightly later it may slip towards recession. That's a possibility, but we do not know. We can only make a judgment. Markets behave the way it has to behave. There is still a lot of liquidity which is still pending from the time the liquidity was infused into the market during the pandemic time. So the retail investors are pouring money into the US market. That is making it move higher up. Growth of US market is concentrated around very few stocks. I'm given to understand about 8 to 10 stocks are the ones which are responsible for the growth of the US market. That means it's a concentrated rally towards a few stocks. So this is something of a distortion. How it will pan out in future, it is very, very difficult to predict. But right now, liquidity is supporting the global market. The growth numbers which are coming in is also supporting the market. There has been a bull run in the Japanese market for quite some time. How long it will continue, we cannot say. But if the Japanese market take out the lifetime highs, which is just about 6-7% shy of the previous lifetime highs it has seen in the late 80s, then it can open up a completely new zone for the bull markets to rage beyond this point. Now let us look at why stock markets make lifetime highs and when do you have to see lifetime highs as a danger zone. Number one, when the markets make a lifetime highs, you have to find out what is driving the markets. It could be the liquidity, it could be the growth numbers, it could be the sentiments, and these are the three ingredients of any bull market. Without that, it will not express. The first time you have to be conscious or careful when the market makes a lifetime high is when the markets have rallied for a long period of time. It has spent few years. See, in the year 2003-2004, markets came out of a deep correction and started rallying. And markets were at about 4,000 levels for literally 10 long years, and then they started moving up. Now when the markets are at 4,000 and when markets reached 8,000, people thought it doubled. And if you had done a mistake of exiting the market at that time, you would have missed the rally. In fact, the market did not stop at 8,000. Rather, the market climbed to about 21,000 from the year 2003-4, which had Sensex at about 4,000. By the year 2007, which is about 3-4 years later, the markets peaked at about 21,000. Your early exit from the market is not favorable to you because you will not be riding on the rally. You must ride the rally. You do not know whether it is a madness, whether it's the liquidity, whether it's a growth, what is driving the market. You do not know. When the markets make lifetime highs and they make higher tops and higher bottoms, it is a rally to be participated and you should stay there. You should not be stuck with fear. Otherwise, you do not know the madness of market market, how high the market can take you, you never know. So do not do the mistake of exiting markets at this point of time. Let things run as it is. If it has run for many years, 3 years, 4 years, 5 years, and you feel that it has reached a dizzy height, the valuations are not supporting, that is the time you should think about it. And markets will give those indications. The valuations are dizzy. See, today you look at the small cap valuation, it's at a dizzy height. What happens beyond this point for the small cap is very difficult to make a guess on. We are very cautious, and we saw actions coming from SEBI, we saw actions coming from AMFI, Association of Mutual Funds of India, asking the retail investors to be cautious, take proactive measures so that the retail does not lose money in the small caps and the mid caps, and they did a fantastic job. But if you look at a large cap space, the story is it has value. It has not reached a dizzy valuation where it will crumble on its own weight. That has not happened. So there is a good scope if you are on the center of the market, which is the large cap, which takes about 60 to 70% of the total market capitalization. I personally feel there is a lot of upclimb which is still left in the market. So as an investor, how should you handle this particular market? What I'm very, very clear is, this is not a market where you will exit. You should not exit this market. Market is just coming out of an hibernation. You saw the markets correcting between 2021 to 2023. It spent 2 years below the previous highs, and then the lifetimes have taken. So that means it is not a continuous up move. It has come out of a correction. It spent enough time, and the economy is catching up. The data is supportive of growth which is happening there. There is no tiredness on the part of liquidity. We are at the peak interest rate right now. What can happen from here onwards? The central banks are not likely to increase the interest rate. Rather, they may maintain it here. Are the chances of the interest rates coming down from here are very, very real. If the interest rates come down from here, the markets obviously have to rally up, whether it's in India or in other parts of the world. The only time where the markets can give up is when the liquidity tightening happens. The fuel of any stock market is the funds, the money which comes into the stock market. If that is intercepted, then the stock markets can correct. But right now, there is no visibility to say that neither the central banks are likely to act to curtail the liquidity into the market, nor there is a tiredness of cash-starved retail investors not able to pour money into the market. Central banks are favorable at this point of time, and the retail also has cash, and they have become mature investors. They regularly put money into the stock market. So this is supportive of markets climbing high. As an investor, you have to keep certain things in your mind here. One, you have to understand volatility from losses. Why people exit the market? They fear losses. Why they think they are losing money? Because the markets are retracing. If the markets retrace, it is volatility. Volatility is prices moving up and down. Do not equate volatility with your losses. Losses is your real losses. Volatility is prices moving up and down. You have purchased an asset, you have purchased a mutual fund, you have purchased a stock, PMS, whatever it is. Today its valuation could be something, tomorrow it may be lesser. Did you make loss in that case if the prices have come down? The answer is no. The prices are passing through a volatile phase. It's like a turbulence in an aircraft. After some time, again it will move up. You have to withstand that particular time. Do not equate volatility with your loss. When you become panicky and when the volatility strikes the market, you exit the market out of panic, then you create a notional loss into a real loss. So be prepared for the volatility. Volatility is the order of the day. No market moves like a straight line. It always creates a waves pattern. Be prepared for the volatility. So you just have to lengthen your period of investment. If you have invested for 3 months, 6 months, you have to be concerned, because I don't know what happens to this money after 6 months. Why you have kept this money? Is there something that in your life goal which requires this money to be utilized in 3 to 6 months? You have to be concerned. It's not a place where you can keep this money in the stock market at this point of time. But if you say, I don't need this money for next 5 years, 6 years, 10 years, 15 years, you just don't have to worry about where the market is. You will laugh it off. After 5 years or 10 years, you will laugh it off. Oh, I was so much concerned for the market. Market was at 74,000, and look at where the market is 5 years from now. For those of you who are new investors who are worried about what happens in the market, a simple way for you to check how markets behave is take any 2 points 5 years apart or 10 years apart. For example, you are in 2024, how the markets behave, go back 5 years and see where it was in 2019. If you want to look at how the markets behaves over 10-year period, go back 10 years before and check where the market is. You take any two reference point. You don't have to take 24 and 2019 or 24 and 2014. You take two reference point, 2019 and 2009, or you take 2020 and 2015. So that will give an indication over longer periods of time how the markets behave. So you have to lengthen the period of investment, and that gives you a comfort. Anything happens in between is a turbulence, it's a volatility, it is not a loss. You should not react to it. You should live with it. Close your eyes, forget that you have invested your money. Stay invested wherever you are. Point number 3, understand black swan events happen. Black swan events are events which you can't even imagine. They will happen at periodical intervals of time. What happened in the year 2008, the housing scam, was a black swan event. The Ukraine war is a black swan event. And when the pandemic struck, none of us expected. The crude prices moved to a negative zone. Instead of crude commanding a price for you, crude started giving negative return, minus value. Somebody who has a crude had to pay money to somebody to store it. So that's a black swan event. Something going wrong in some part of the world is a black swan event. Remember, always be prepared for a black swan event. How do you handle a black swan event? Simple. Be prepared for it. How to prepare? Again, you have to have an asset allocation. All your monies do not put into the stock market. All your money do not put into one asset alone. Your portfolio should have a mixture of all kinds of assets. For example, your FDs, for example, your commodities, for example, real estate, for example, stock market. These kinds of an asset should always be there. The best way to handle the stock market and understand the nuances of the stock market is to work with an advisor, a seasoned advisor, an ethical advisor who will help you to understand the historical perspectives. He will be able to dissect the data. He will be able to convince you. He will be able to handhold you. He can put the asset allocation. He can control your emotions of fear and greed. Then you will emerge as victorious from your investments in the stock market. Instead of that, you depend on Google Baba to do your research and try and bet your money on the ones which give you the highest return. Make no mistake, at one or the other point, you will be up for a rude shock. If you are somebody who is looking out for a professional advisor to guide you in your journey of investment to reach your life goal, you can make best use of services provided by NRI Money Clinic. We have experts on the ground who can help you design things for you as you want, handhold you, and we have a team of ethical advisors to assist you. How you can reach out to us with your request? Very simple. Our WhatsApp number is given here in the description box below. We have also given a link over there. Click on the link. It takes you to the WhatsApp. Send your exploratory message to us, and my team of experts are ever ready to help you. Why delay? Send that message now in case if you are interested. Dear viewers, hope the episode that I have done today helped you to understand what exactly you need to be doing when the markets are hitting the lifetime highs. If it did give you a direction, should you be selling? Should you be buying? Should you be taking the assistance of an advisor? Or what points are driving the market? Do give me a thumbs up. Do not forget to share these videos with your friends and relatives and on all the WhatsApp group on which you are connected with. Needless to say, if you are a person who is watching this channel for the first time, do subscribe to the channel, press that bell icon. You will be notified whenever I release these 2 videos every week. Do not miss one single one. There is so much of value in these videos. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another episode of Your Life, Your Money next Friday.
Press the bell icon for more details and subscribe our channel.